Hello and welcome to another stocks update. Today we want to talk about UnitedHealth Group Incorporated, currently in a support zone, so we have a potential setup there. Looking at the long-term chart first, we can see that UnitedHealth Group's chart started with a 1-2-1-2 setup. Second 1-2 is a bit questionable because the wave 1 is very long compared to the first wave 1, but then, the start here is always a bit questionable. I think it is acceptable, because obviously you don't have all the data here in the beginning, or at least, even if we start from here, very much in the beginning, these charts are a bit unreliable, but still I think we can consider this a 1-2-1-2 setup. Certainly 5 waves up here, certainly 5 waves up here, and price action suggests that we are in a third wave rally, and this third wave rally is still to be concluded, so still unfolding. However, I believe we are in the late stages of this large degree third wave, Roman numeral 3, and we should start this larger degree fourth wave at some point, but possibly might get one more high in this third wave. It's not quite complete, even though I have to say here on the 4-day chart we can already count a nice 5-wave pattern to the upside. So that means, we might get one more high, but considering the context, we're already in the late stages, so it's more like the icing on the cake. However, we have a very much established uptrend. Anybody who wants to jump on board in a still unfolding third wave, either here for this third or for this third, still has the chance to do that, because long-term target projections point towards 1,187, possibly even higher, 2,322 or 7,000. That's really long-term, and I wouldn't really focus on that right now. It's too far out. Too far out. It's just a mathematical projection, and it will probably take decades to get there anyway. But it just shows what's still possible, and allows for some reward to risk calculations. So thing is, what do we normally expect from a third wave? So the absolute bare minimum I want to see from a third wave is normally the 1.236 extension in an impulse. Now you can see that actually this third wave, reached that. Okay, so we've reached the 1.236 extension at around $500, even a little higher, but couldn't sustain above it. So that definitely allows for the interpretation that we might have completed this third wave, which started in 2008. Yep, we might get one more high, and if we get one more high, we might target the next fib level there at $760 before the third wave completes. But I have two support areas now on the chart. I've got one micro support area, or let's call it the upper support area. As long as this is holding, one more high is basically acceptable. And I would expect it, or at least to watch for it. Now, don't get me wrong, this is still just only the icing on the cake. The highest probability element of this rally is likely done. But if we can get a turnaround in this upper support region, and we're going to zoom in a minute, well, then we could get probably a few more months of upside in the current structure. However, if we get a break below the upper support area, we're likely going to see the price dip into the lower support area, and would have to assume that would be the alternative, but it's definitely likely already because upside Fibonacci targets have been reached. If we get into this lower support area, we might dip into the area between $90 and $235. That is a very broad Fibonacci support zone, standard support zone for a wave 4. Few things to mention here. It is likely that we would at least get to 235. Normally the ideal target for a fourth wave is $138 in this case, so the 38.2 retracement, and sometimes they also finish in the area of a wave 4 of lower degree, so around $191. So that's just something to be aware of. A drop to 90 is technically valid, even in a wave 4 of a larger impulse in a third wave, but would obviously be a deep correction. Because wave 2 was a sharp correction, a zigzag pattern, a very clear ABC, the fourth wave would most likely be a triangle pattern or a flat. So it could be A wave, B wave, could even be an overshooting B wave, and then a C wave. So it's not like, there wouldn't be any opportunities even in this larger degree fourth wave, which would probably take some time to play out. We might get a B wave rally and so on. But the parameters, are important. So now looking at the 4-hour chart, you can see here this upper support area that I highlighted. Smaller degree third wave likely topped here in April 22, have an A wave down, an overshooting B wave, and then the C wave down is unfolding right now, I would say. Within the fourth wave, of a larger degree fifth wave, of an even larger degree third wave. So that's all what we just talked about in the long-term chart. This is this upper support area. It spans between 389 to 468. We obviously already entered the support zone. We're forming something that would look a bit like a double bottom here. These typically don't hold, in contrast to what many people believe. So I would argue that even if we might get a bounce from here that's temporary, we might go a little bit deeper into the support area. Now, still though, a key level is the 100% extension level of wave A. That's $445. I mean, we are now in an area where we can be watching for a reversal. Support below that, there is some Fibonacci confluence at $422. That's again the ideal target for a fourth wave, the 38.2 retracement, and below that 389 still. That would be a deep wave 4, but still technically valid. Also Fibonacci confluence at that area, 389, and structural support. A sustained break below 389 would likely send us into that lower support region. So, but until we get a break, few things to mention. Until we get a break below, I can't confirm that we're in the larger fourth wave. It's already likely and not preferred as long as we are above micro support. We have to consider though that we cannot be bullish at the moment in the short term until we see a first reaction to support. Yeah, because of the downside risk. It's quite high, and I would just want to see first a reaction that we could possibly put a stop below to trade the wave 5, possibly into the $700 region, but that was just a larger degree target. I mean, as soon as we have a low in place for this wave 4, we can calculate a lower degree target. I can already give you some rough figures. Let's assume we come down to 422. What would be a target for this smaller degree fifth wave? Normally it's either the 38.2 extension or the 61.8 extension, and here you can already see I would aim for the lower one, just conservatively, and that's 638. So yeah, that's my update about UnitedHealth. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.